It's now time to head over to the equities market as investors' interest in banking stocks. The Nigerian equities market is extending gains recorded this week despite investors seeking higher yields across the fixed income instruments. Muktar Mohammed, an analyst at Assar Investments, joins me now for some more market updates. Muktar, thank you so much for joining us on the show today. There is a stiff competition here. Looking at the higher yield environment the fixed income market is offering at this point in time. But let's talk about the market interplay, the sectoral performances that we've seen so far with a keen focus on banking stocks. Let's talk about that.
Well, for the banking stocks, they've been up and down. They are at all-time high. And if you um, look at that with where they are today, you will say, okay, they are a bit lower than where they started the year with, at the beginning of the year. But again, that sector need a trigger, and that trigger will come when those results start trooping in, especially from the Tier 1 bank, especially the audited result, those that have been confirmed by CBN. So definitely we are waiting at that space, but we're expecting a lot of value coming from that place now. And as when the results start coming in, we know that it will give investors a lot of value. But again, I'm not too excited that there will be the kind of astronomical price progression when this result comes in, because I think that has already been pricing. So what we will see is what we normally see when this result comes in. You might not even see those kind of movement that you thought it could even sometimes it could be very funny, even go down towards the closing of the day, it goes up again. So you see that. But investors will be looking at the first and second quarter, especially the first quarter results. That will begin to make investors begin to look at what the sector will look like in the coming this year. So definitely by second quarter, ordinarily, investors are excited about the banking stock because of the interim dividend that will be coming from Tier 1 banks.
Yes, but how much weight will you now say on the banks right now, when we are looking at the raft of reforms and the leaning of monetary policy mechanisms the CBN is adopting at this point in time? And how does that also send signals to investors when it comes to choosing banking stocks?
Well, when it comes to that, you see the CBN is doing all that because they want to attract foreign investors into the market, especially in a low risk sector like the bond and the treasury market, the fixed income market. But you and I know that those investors are not coming because of the interest rate, which is very, very volatile and unstable at this moment. So most investors, especially the foreign investors they are trying to attract, are not really coming to the market. Then you look at the Nigerian equity market, what has really driven this market today is the local investors, and these local investors are only looking to maximize returns because of the kind of capital position they've gotten in the equity market. So they are trying to minimize risks again. So they are trying to move into the fixed income space for now. And then they must see good entry point to come into the market, especially when the market have that slowdown. When this result comes in, they begin to justify both what is happening and with the fixed income space. But for now, I think most investors that are in the fixed income space are those that are exiting the equity market because the high returns they have made and looking for a safe havens in the fixed income space, especially now that the rate has gone up. But you must have one thing in mind. Despite the rate going up in the fixed income space, the equity market still seems the only sector that have been able to beat inflation. So even at fixed income at 19%, you are still having a fall shot in inflation of about 10%. So the equity market is still the tools of investors, knowing that we are just looking at just the capital appreciation. We are not looking at dividend payment. And in times that we have economic crunch like what we are having, FX volatility and others, liquidity become kings. And when I talk liquidity, I mean cash.
Yes.
And when they are coming from these banks, a lot of investors will be looking towards it.
Muktar, I would also like to have your take. I've asked this question several times in terms of sectoral sensitivity to all of the movements we've seen here, the policy direction so far, both monetary and fiscal. Let's talk about the interplay, industrial goods, consumer goods, oil and gas. Where lies their faith in the short term?
Well, for the oil and gas, I think where lie the faith has to be if they want to attract investors with what the CBN is doing. Investors who want to come in. because we are looking at a two-way exchange system. The president has been traveling all over the world, telling investors you can come and invest and you can repatriate your money back at us when you do. And now the CBN is saying that you can only repatriate 50%, and after 90 days you repatriate the remaining. So that sector will not be attractive. You will not see those kind of investment that will come in. But again, Dangote refinery is already there. It will soon start getting product from there. So maybe we might not need so much in that space. For the consumer goods sector, it's very difficult times for them. This MD of Boa Food has come out to say it's very difficult for them to even prepare because today they are getting interest rate at 152. Next day they are getting it at 115. And within January and February, the customer have moved rate from a low of 929 to a high of 150, a high of 1,515,
yes.
and that is not good. That is not good for them, and they are suffering a lot of loss. So, if you ask me, that sector is not a sector to play in now because of the volatility. And when you look at the results that are coming from that sector, you can see the negativity of this policy playing a bigger role in there. And going forward, we are not seeing any change yet in that sector with the kind of policies that have been driven by the present administration.
Let's also talk a little bit about the subsector, the cement space now. We're seeing retail prices of cement go higher. In Lagos, for example, 9,500 naira for a bag. And in cities like Abuja, that goes well over 15,000 naira. In terms of the movements here, where lies their fate as well, too?
Well, but the cement, and the good thing about the cement sector is that it's now locally driven. We are not importing so much cement. We're actually exporting. But again, the machinery that are used for the production are being imported into this country. So somehow that also will affect their own in terms of effect because they need effects to bring in these machines. So what do you think? You gain one way, you lose in the other way. For me, I think the cement sector still have a lot of value with the price because the government still wants to do construction, and with what the minister is saying, the type of construction they will be doing, they will be needing the cement sector to play a level. In terms of housing, the president just commissioned a large housing project that is about to be, and so the cement sector is going to benefit from that. But the real estate sector, there's been a slowdown. But again, that has been compensated with, like what I talked, the construction sector, especially major roads construction. So there's still value in those sectors. You can see Boa Cement, you can see Dangote Cement, the big player in that sector. There's still a lot of value in that sector. But in terms of the price of those equity, what investors will be expecting from them, I think we need to see those numbers to even say if they are really, really overpriced. But as it stands now, based on their last result and the prices that they are standing at now, I think is very on the price. And so when a stock is on the price, when a sector is on the price, then investors begin to do what we call value investment and looking for sectors that have their price is low and there's still a lot of value especially for capital appreciation and dividend yield. And that is why the banking sector seems to gain when some of these sectors have a slowdown, because this seems to be the one to gain from some of these slowdowns that are happening in all this sector, especially because of the value they create and also the dividend they pay to investors.
I'm sure new and younger investors are just looking at how market activities are playing out and also looking to where to put their monies. But we'll leave the conversation here for now, Muktar. Thank you so much for your time on the show today. That was Muktar Mohammed, an analyst at Assar Investments.